welcome back. I'm Dee with Crystal Metz Insurance Agency. In my last video, we spoke about permanent and term life insurance, kind of gave you the basics, and this time we're going to dive into permanent whole life insurance while I paint Fluttershy. Enjoy. All right, so today we are discussing permanent whole life insurance. In my last video, I gave a brief description of the difference between permanent and term insurance. This time, I just want to dive a little bit more into permanent insurance. So recap, permanent insurance is guaranteed premiums and guaranteed amount of insurance. Your premiums will never increase, and the amount you insure for will always be paid out to your beneficiaries of your choice. Often, these policies will hold options to pay them up. So you can choose a policy that is paid up in 10 years, in 20 years, to age 65, age 100, that type of thing. So what's the benefit to doing that? It's like the premiums are being condensed, but at a much lower rate. It costs a lot less when you do a shorter paid up term. Think of it like a car loan. If you get an 8-year car loan, you are going to pay a lot less monthly than you would with a 2-year car loan. However, the full finance amount is going to be quite a bit higher on the 8-year than on paying it off in the 2 or 5 years. I'm gonna give you an example. A 35-year-old male buys $125,000 in a paid up 20 policy. That policy is going to cost him $150 a month. If he purchases the paid up at 65, he's going to pay $118 a month. Where's the benefit? Well, if he needs to have a lower monthly payment, then he chooses paid up at 65. If he can afford that slightly higher payment, overall, he is actually going to pay quite a bit less, okay? Let's do the math really quickly on that. If he does the 20 pay at $150 a month, after 20 years, he has paid $35,850. If he does the age 65, he has paid $42,500. Even though that monthly premium was less for the age 65, he's now paying more over the long run. Just like your vehicle loan, at the end, when you're done paying it off, you own the vehicle. Guess what? Same with the life insurance. At the end, when you're done paying for it, you own it. It's yours forever. Okay, so we now understand the lower time that you are paying it up, so paid 10 is going to be in the long run much less than a paid up 20, paid up 65, paid up to age 100, for example. And again, the monthly payments are going to be less on those higher ones, but the overall cost of it is going to be much higher. Does that make sense? I hope it does. If not, rewind, watch again. Here's the other thing that I want you to think about. I hear this often from people, that they will just take that money and invest it, and that they could make just as much or more by investing it. Well, could it? 2 things, maybe 3. Are you going to have the willpower or the discipline to actually invest that money? Are you going to be able to continually invest that money? How long will it take for that money to be equivalent to what your life insurance would have been? The other thing is, that's looking at the long-term investment, which I can appreciate. But there is no investment that I know of that somebody would pay $118 1 month. So he got that paid up 65 and paid 1 month of premiums, so $118. And the next day, tragedy happens, and he or she passes away, their loved one is getting $125,000. There's no investment out there that will match that. I know that you are not getting that money. But again, life insurance is not for you. It's for your loved ones. To know that they are taken care of if something, heaven forbid, happened to you. All right, so permanent life insurance. You can purchase paid up policies. You can pay them in usually 10-year, 20-year, age 65, maybe even an age 75, depending on the company, and to the age of 100. Benefits to this is that you pay a lot less than you would paying for a longer. So if you buy the paid up to age 100, it's going to cost you a lot more in the long run than the pay up 10, like a vehicle loan. But you will always pay a fraction of what your actual benefit amount is. That guy was only paying $42,000 for a $125,000 benefit. That's an amazing investment. So stay tuned for my next video, which will talk a little bit more about term insurance and when and why and the benefits to having a term policy. And for now, Fluttershy and I are signing off. Have a great day. Thanks for watching.